The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Thanks for joining us here at TFNN here on a Thursday. Tomorrow, we're going to have Samuel Arrington Archibald Crawford on. Arch Crawford from Crawford's Perspectives will be on as our guest, one of the premier astrologers and technical people. He's also heavily ranked every year in the Timer Digest. It's interesting, in the top 10, there are 3 astrologers in that top 10 this year. And so it's pretty interesting about how that works. I'm going to try to explain what I think is happening. The first chart that I posted here, and we have posted it ever since May, I believe, is the chart of the New York Stock Exchange Index showing the 1, 2, 3, 4, 5 expanding triangle. And it shows the relationship at what happened in 2008 and what is happening now. I've also posted into Tiger TV the quotes yesterday from Lehman Brothers back in 2008 and how they were saying everything looked really good. And what we get yesterday from Deutsche Bank, the same thing. We are rock solid, no problems over here. And the stock was up 9% yesterday and is down 11% today. So they're doing their job. They're trying to keep their stocks alive. If you'll remember Enron, when Enron came on at 95, it went to 85, no problems. No problems at 75, no problems at 65, no problems at 55, no problems at 45. The problems started coming in when it went to 0. Okay, let's talk, since we've had a question about Treasury bonds. Folks, if you like patterns, boy, you got to like the bond pattern. I was doing for our 24/7 Fibonacci 24/7. I'm so conservative in there. I treat it like a widows and orphans fund, and I only put on trades that are relatively low risk. And the trade that I'm looking at today, of course, was Twitter. That we've talked about before. But the second trade that I wanted to do, and I had everything ready for it. I made the video and everything, and that was to buy TBT. And I said, no. I said, I don't need this. It's going to gap down and probably hit right at the price. But I just feel because it's a Friday, I want to wait. And in fact, these markets are in such a free fall that I just have to wait on it. But boy, there's another one. That bond chart is really ripe. It's got all the factors necessary. You're getting great emotionalism here, folks. These are the kind of swings. Look at these. We're having 70-point swings every other day in the S&P. Yesterday, if you recall, we were on the show, and there was a beautiful ABCD pattern up there at the 1874 level. We hit 1876.5 right after the opening. Then we had 3 lower highs. All of them were, Fibonacci retracements. So, mainly that's what we're looking at. Someone's brought the question up several months ago. I talked about why wristwatches were advertised with the time of 10:10, 10 o'clock, 10 minutes after 10. All watches, almost all watches are advertised that way, and there was a reason for that, but I cannot divulge that reason for a little bit yet. The person that told me the answer to that was making it. There's something special going on there, so that's really what I wanted to look at. Yeah, today is Thursday. That's correct, but Friday. But tomorrow is Friday. The way you do that, folks, you take Thursday and you add 1 day, and that gets you to Friday. Now, if you want to go to Saturday, you add 1 more day, and so on and so on. And there are 7 days in the week, so we'll get back to that in just a minute. But let me give you another little hint about the 10:10. If you take a look, people look at the pyramid, the Great Pyramid in Giza, in Egypt, which is about 20 miles south of Cairo. you look at the pyramid and it looks like it has four sides, doesn't it? But in fact, if you look at the top of the pyramid on the days of the spring solstice and the autumn equinox, as the sun comes down, it shows that the pyramid is actually concave. There's actually eight sides to the Great Pyramid. And this is where, Fibonacci, came up with his number sequence at 0.618, because the height of the pyramid is 450 feet and it's 730 feet wide, but it's a concave. It's really an amazing thing. But that you only see that from above when you on the spring equinox and the autumn solstice. So this is really something to pay attention to, I think, if you like metaphysical stuff. And if you do, there's a great book by Peter Tompkins, The Secrets of the Great Pyramids. And it's really nothing but a library in stone. It's got so many numbers that are related to it. But that's how Fibonacci came up with these numbers of 618 that he published. There was also a fellow from Syria, Al Jazeera, who was an incredibly brilliant man, who was instrumental in making clocks. And this was back in the 13th century. And he also went to Egypt and studied the pyramids also. So they have a lot of secrets, but they haven't told me any of them. But anyway, we'll get back to the bond market here, since we'll talk about bonds. See, whenever I'm talking about something other than the markets, that means I have no idea what's going on. Few things I do understand, and this is, we're going to be talking about one right now. This is the Japanese yen, the dollar yen trade that we've been looking at. We've been talking about the similar equal retracements, and you can see we've now come down into the 111 area. That's the lower end of that band. We've completed the big ABCD, so we should be pretty close to a pretty good bounce here. I know there's all kinds of rumors circulating about the BOJ, the Bank of Japan, doing something crazy in the markets. Well, they do. What are you going to do about that? You've had a 350-point swing in the yen today. You're down 100, up 150, and down 100, and then up 100. So you've had a 400-point swing in the yen. That's usually indicative of something that is relatively important from looking at it from a trading standpoint. We're going to get back to gold right after the break here. So it's 877-926-6678.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we were talking about the bonds. I'll get into gold and silver in just a moment, but I do want to talk about bonds and notes because they're completing some major stuff in here. I could be wrong, but, you know, these are just patterns. I posted a chart of the 10-year notes. Those are the largest commodity that we trade. That's by far the biggest futures contract. And as you can see, we're completing big ABCD patterns in here. It's interesting that the Treasury bonds themselves, the 30-year bonds, have gone up to the 1.27 level, up at the 170 and change level. There's a lot of emotionalism overnight, and as you can imagine, what happened was, you know, as soon as Hong Kong opened, it was you know, Katie barred the door, and the door was not wide enough for everybody to get out. I'll walk through some of that in a little bit, but let's just go into this bonds here to take a look at it. Now, I'm going to show you the DTF for the bonds, and I'm not doing this. I'm not buying it today. I just got it on my watch list to buy. And basically, what I'll do is I will short the bonds. I won't do the ETF, but as you can see, we have this huge butterfly on the going back 18 months. And 16 months, and it looks it's got everything that you can possibly ask for down around this 34 and change level. That's probably where it's going to open, given the fact that the bonds are so very, very strong today. That means the ETF is going to be weak. Now, I wanted to explain what I think is happening in the market. As you know, we've been very bearish for quite some time, and we were watching for this the market to come into the high of the 8th, the 8th to the 10th of into that new moon period, and then that's what we were, you know, really keeping an eye on. So this shows you the Bradley model. Now, what I wanted to do is I wanted to show you Shane Smolian's a micro view of the Bradley model, which is really nice because it gives you a better idea of what's actually happening on a shorter term time frame. And this also, you know, reiterates the bearishness. You know, when you see these ABCD patterns like we had in the S&P yesterday, you know, they last 3 days and down they go. That's all you're going to get. So we'll have to wait and see what happens. But as you can see here on the shorter term, that this still has a lot of negativity built into it. And this was all highlighted by the work that Shane also did, you know, way back in January when we were first talking about this speed of the planetary index that he had been working on. And you'll notice that on the 10th there, he was looking for a major top, and we had it. It wasn't a major top, but it was certainly certainly a top, and we've broken quite a bit, and it shows that we have a pretty good emphasis to the downside. That's what it looks like. Who knows? But anyway, that's the markets are bearish, folks. I mean, they're going down. The news is starting to become bearish. I mean, even people that were bullish now are beginning to come bearish. So we'll see what's going on. I didn't know that someone named Paul was waiting. I didn't know someone had called in. That's my bad. Sorry, I didn't see that. Boy, I wish I'd have seen that. I guess that was a big gaffe on my part. Okay, let's take a look here. The one of the bigger problems that we have now, and that is we don't have it. This is the one from Japan, because they're in big trouble, and we're going to be that same way because they did the same thing we did. If you'll notice here, this was the Nikkei chart on the weekly basis. And we bottomed down there at 16,250, and then we had a really, really good rally for 3 weeks that went to a 382 retracement of the move, and that's all you got. Let me see if I can pull that up. I have it ready to show. Here it is. I believe this is it. Yeah, there's what I want to show you. You'll see here that we went down and made a 1.618 expansion on this, and then we had a little bit of a rally in the Hang Seng, and then this thing just literally, has gave up the ghost. It was down 4% last night, and that sets up an ABC structure down around 15,000, which is another 20%, almost 20%, from where we are now. So we're in some really bearish time frames. So how do you profit from this? Okay, since I'm not getting any questions coming in here, I'm going to try to show you a trade that you got to take a look at, folks. If you like patterns and if you like ratios. If you don't like patterns and you don't like ratios, maybe you like ice cream. Ice cream's always good. Okay, this is the Dow Jones Utilities. And you'll see here that we have 3 major ratios coming through this week. We've been here for 6 days at the 786, 127, and 1.414, which is the square root of 2, which is how electricity operates. And so you want to be looking to sell the utilities. Probably the best one in that group is pick a stock, in that utility index, and then see, and see what was going on. Okay. All righty. Okay, let me see what we got here. The main thing that I wanted to bring to your attention today, and I can't find that darn chart. I've got it in here. I wanted to show you what happened with the Hang Seng index, because that's why the market broke so badly. It had that very shallow rally, and then just didn't. Darn, where is it? Well, this is frustrating as heck. No, I can't have it. We had the same thing in China. All of these things are failing, folks. That's the bottom line. We're getting 2 and 3 week rallies and then down again. This is a very, very bearish scenario. And Deutsche Bank, mentioned that, was up 11% yesterday, down 10% today. So no one is actually, believing that. Now, so we have a question about Shane's planetary speed index. What I was looking at is I watched for the date itself, and when we were coming into the 10th, we were having a 3-day rally into that top, because we had bottomed down at 1820, and then we rallied up to 1874, which is 50 points. And I was just looking at that ABCD structure, considering it was a top. Maybe I was looking at it wrong, but I'm in contact with Shane, and that's pretty much what he was describing to me of what was happening. Maybe I read that wrong, but it turned out to be the right way to read it, at least from the shorter term standpoint. Now, I wanted to bring up the gold chart, gold and silver, because silver is still lagging badly, but it don't make any difference. It's going up with gold now too. the main thing about the gold, folks, when we took out 1203 yesterday after the market closed, that was telling you that this thing was off to the races, because it had every reason in the world to stop at 1203. We had a $15 sell-off from that level. It looked very poorly. It came back quickly, and then right after the markets closed, when it's a thin trade out there, away it goes. Now, if you look at this long-term weekly going back over the last several years, for 2014 and 2015, the last time we had a rally this big was in December of 2015, that lasted for several months. So we're going to take a break here. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I'm going to post a chart of the Swiss franc in, because we've had a big drop in Swiss, well over 550 pips here in the matter of the last 8 days. We've come into some pretty major support down here at the 96 level in the Swiss franc. That is corresponding to what we're looking at 113 in the euro. So the currency markets is where some of this stuff is really going on. Oh, we got a caller from Boston, Massachusetts. Jay, can I help you?
Yeah, good morning, Larry. Question for you. A few
Sure.
weeks ago, you mentioned what you thought might be. You kind of threw out a teaser for what you thought might be the trade of the century, I think was the phrase you used to describe it. Something that looked really particularly strong, unusually so. Is that something you might want to discuss a little bit and tip us off?
Well, yeah, I will. This is a I'll have to give you a warning on this because it could possibly not work, but it's
Yeah, well, it's true of everything.
You guys in Boston are all alike. I tell you, you must be cut from the same cloth. Are you Irish by any chance, Jay?
100%.
Well, the other Irishman's in there raising hell with me, Mr. O'Brien. It's the bond market. I'm looking at the long-term chart on bonds and notes. I don't know when it's going to happen, but it is going to happen. I mean, I'm a chartist. I don't know diddly squat about the fundamentals. All I know, quantitative easing did not work in Japan. It hasn't worked here, and it's going to end badly. What people don't, this is basically what I'm going to try to answer your question, is to short the bonds. The easiest way to do it is to let them break and then sell the first Gartley back. And you're going to get one because there's going to be plenty of people that want to buy them all the way down. Because Bernard Baruch said the greatest scam in all of finance is to run things up to a high price and you get people to buy it all the way down. And that's true. So the trade is, and I'll watch this, Jay, because you were kind enough to call in, is to wait for the Gartley pattern to form, much like we had in the Swiss franc trade here that I posted. You don't have to pick the top up there at 103. Wait for the market to break and then sell the first rally back. That's what Gartley said in his book. That's the easy trade. So that's the trade of the century, is higher interest rates, because what we've lived through is just not normal. And it's going to end badly. So that's pretty much the way I look at it.
What's a good vehicle, do you think, to use to sell the bonds once the moment are?
TBT, the ETF for the bonds is TBT. I don't know where they opened yet, but the buy price was around 34.30. Somewhere. I think that's where it was, around 34.30, to see what was happening.
Huh. Well, that's a good tip. It's a time for catastrophe. It feels it's in the air, and it's been 7 years, and seem to be 7-year peaks, and in so many things.
Well, the bonds have been going up since 1980 was actually the low or the high part of interest rates. No, 82 was the high part of interest rates. So we've been 33 years, into a lower interest rate environment, and what they've done over these last 5 or 6 years is experimental, and we'll see what's going to happen with it.
Yeah, manipulation doesn't really.
No, it won't make any difference. No, it doesn't make any difference in my opinion. But we'll wait and see. But it's got all the factors there. But the safe trade, Jay, is to wait for the market to have its first break, and then watch for the little Gartley pattern that will occur. It might take 3 or 4 weeks for it to do it, but it'll be a safer trade, and you'll have a better idea of what your risk is. Well, you can know your risk here because you don't have to risk more than a couple of points in the TBT. But the safer trade is wait for the sale back when the Gartley rallies back after the top is made.
Yeah, this could be like a dam breaking on this one.
Well, it's going to hurt a lot of people. That's the bottom line of what you're looking at. Look at any of the markets that had runs like this; they all end the same way. So we'll have to see how this one ends, but that's what it looks like.
True enough. Something I wanted to mention was it's terrific the way you mention all the luminaries that you've met along the way. These great individuals who.
That's a function of old age. We all grew up together. Actually, many of these guys. I mean, we all met at the same place. That was back in San Francisco at the Stanford Court Hotel when they gave the Jim Hearst was giving the. It wasn't Jim Hearst. It was a guy named Ray Frechette. They were promoting Hearst's work. I can't remember. What was it called? Oh, it's on the tip of my tongue. Anyway, it was a charting package showing the cycles. Cyclotech, that's what it was called, Cyclotech. And I met John Hill there. I'd already known Larry Williams. I'd known him for a few years. I already knew Peter Elides. There were just so many people that were there, and we've, shared information and met each other at different conferences, and that's pretty much it,
Yeah. Yeah, who knows why these patterns work, but these individuals seem to have the courage to go out and investigate them and work with them, It's just
it's all patterns and numbers. That's all it is.
Yeah.
What was his name? Albert Einstein said, before God was numbers, and God does indeed geometricize. Those were two of his favorite quotes.
Wow. Yeah, when that man spoke, you got to listen to what he had to say.
I think so.
These are phenomena without explanations, and when you just go with what you see, trade what you see, as you say.
You bet.
All righty. Beautiful.
Right.
Thank you very much, Larry.
Thanks you for calling in, Jay. I appreciate it. We've got another caller from Tampa, Florida. Nick, are you there?
Yes, sir. How you doing?
I'm good. What can I do for you?
So, just going off the conversation that you guys were just having, I'm still a novice trader, but are you reading only the 20-year charts? Is that where you're getting your technical analysis from, or are you taking the 10 and the 30 also?
I look at basically the 30-year and the 10-year. The 10-year is the one that they calculate all the interest rates on, and that's the main what I'm looking at. The 30-year is the one that's got the most volatility, but that's what I'm looking at. The TBT, I believe, is based on the 20-year, as I recall. And that's the one that I'm, showing for, low risk entry or something like that. It's close. I don't know if today is going to be the day or not, but we'll get there eventually. Down a little bit lower.
So in the 10-year, what would pique your interest as to see the move is on?
If it reversed and had a really strong move to the upside, in other words, bonds would drop like 3 or 4 points in one day. If you remember when they topped back about 7 or 8 months ago, they had a swing of 5 points in one day from high to low. They were up 3 to down 2, so $5,000 swing. That would be good. And then if we were to check open interest and see that there was a drop in open interest at that time, that would mean that this last run was all short covering, and then you'll know pretty much what you're looking at it. That's the way I read it anyway. That would be like what do they call it? See, a hanging. Let me see it would be a hanging man. Yes, not a hammer, but it'd be a hanging man or a shooting star type pattern. Stay with us, would you, Nick? And I want to mention one other thing.
Yes, sir.
Okay.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Nick from Tampa. Are you still there, Nick?
Oh, yes, sir.
Okay, listen, being a new trader, I want to give you a tiny bit of free advice, okay? And you take it for what it's worth, and since you're not paying anything for it, listen carefully. Don't use real money until you understand what you're doing, okay?
Oh, yes, sir.
It's very important. I don't care whether you're listening to me or Basil or Steve Rhodes or Tom or anybody. Learn to do it yourself and, do some paper trading and understand, what's going on, because the technical part of this is the easy part. The hard part is the mental part, because we keep score with money, and that's what makes the difference. So be sure you do that for yourself, and you'll be just fine.
Thank you, and I appreciate your time.
All right. Thank you for calling in.
Yep, have a great one.
You bet. Okay, folks, I want to show the chart of Twitter. This is something that I was looking at for today. Was wanting to buy it at around 13.22 in the overnight market. You're not going to believe the swings that it had. But after the first news came out, this stock rallied all the way to 16 and then went down to 12.98. On a very, very fast tick, and then quickly jumped back to 13 and change, and now it's trading at 14.40. So it's having some real wild swings, but this is a situation where this major pattern here in Twitter might be enough to get the stock to rally a little bit. I don't think the thing's going to go, it's not doing very well as far as new customers and stuff like that, but it's nearly what's going on. I want to show you what I showed you, the transportation, but the utility pattern. That's the one that you want to, that's got the low risk things that are necessary for it. So keep an eye on that utility pattern. That's a real interesting one. That is looks very, very interesting right now, and we'll see if that in fact is going to work. One other question someone's asked about this planetary speed index. The person that did this originally was George Baer. Oh wow, we've got somebody special on the line now from Singapore. William, how are you?
I'm good, thank you. Just a little of call. Thanks for picking up my call, Mr. Pesavento. Actually, I thought of asking you regarding the gold futures. Today we have quite a spectacular run, from I think the 12,000 to 1,200 to right now about 1243 or 45. What is your view right now on these gold futures?
Well, my view on gold was I thought the 1203 area was going to be a pretty good spot. And yesterday it had held. And then right when the market closed yesterday, the market quickly went from 1205 and then, 1206 and just kept running and running. And it had a heck of a run of, like you mentioned, of $40 an ounce. Now what we've done is we've almost equaled the same move that we did back in 2014. So, I'm the worst person in the world for buying breakouts in strength, and especially when you're up 8 weeks in a row like we are in gold now. So I would, I want to wait and see what the first correction is. I would look to buy a 382 correction of this 100, and let me see, we've gone actually $200 an ounce from the low we made down at 1044. So, a $60 retracement on that would just give you a 382 retracement. So I would look at that. I can't buy it here. No, they'll take that trip without me, but I just can't do it here.
I actually close my long position at 1200, and then I go on short position. So right now, I think part of my profit is gone.
Well, just make sure if it gets above 1250, William, you got to protect yourself because gold, as you know, gets very emotional, and it's been very good to you. You made a heck of a run between where you bought it and the 1200, so you're still setting okay. But the main thing is to don't let it get above 1250 because it could go to 1350, 1450, or anything. Because gold, as you know, and I know, is very, very emotional. It's just the metal that has the sparkle that people like. So just make sure you protect yourself above 1250.
Oh no! What I meant is I bought around 1100, so I took my profits around 1200, and then I went on short position at 1200. And that's where I'm caught, and I think I lost part of my profits because of this today's move.
That's okay. Now you're setting all right. You're setting okay as long as you don't. Let's say 1255. If you see a 1255 quote, you're going to have to get out because you still made 50%, and that's better than most people have done. So just make sure you protect. Remember the words of Roy Longstreet, William. The first mistake teaches you. The second mistake kills you. The first mistake is you went short. The second mistake is you didn't put a stop in. So make sure you put a stop in the second time, and that will be what you're watching.
Oh, because I did not have a manage to have a stop is because I was trading the GLD instead of.
Oh, you don't have a choice because you're sleeping when it's
Yes. So I have to wait for the market opens before I can do any ratifications there. Okay, I got it. Thank you very much, Mr. Pesavento. Thank you very much.
Thank you for calling in, William.
Thank you. Thank you.
You bet. That was William from Singapore. Okay, anyway, that's happens when these markets are not trading 24/7 like some of them are. Then that's what you're looking at. By the way, I will mention this. One of the not one of the best, the best trader that I know lives in London, and today he went long the S&P at 1808, and he's risking 20 points on that. He was also covering shorts, so he's been pretty much spot on. We'll see if it's correct, but it's a Friday, of course, and that is followed by Saturday, which is followed by Sunday, and then we will have the Chinese market opening, and that's going to be another wild one. So that thing is going to be real interesting because it's been closed for 5 days with all of this volatility and the breakdown we've had in Hang Seng and the emerging markets. It's just been a really, and the FXI, which has been trading, has been going lower. They already thought that was going to break to the downside. So we'll see how this ends up here on Sunday. We're going to have some real wild swings. The good part, folks, is these swings are here to stay. We're going to have volatility that's just going to shake the socks off people, and this is what pattern recognition is all about. It's because it's nothing more than high, low, high, and low, high, low. It's all it's doing is making these little triangles, and that's really what you're watching. When you're doing some things like this. So we'll keep an eye on some of the things. We've already broken 2.5 handles now in the bond market. So maybe this is going to be the day in the bond market. We'll have to wait and see if that's going to be the case. But it's going to be hard for anybody in the hedge fund business or the stock business to have a buy signal today in stocks. That's just probably not going to happen because, Friday and with the weekend coming up and the market being down so much, there's no way they're going to get a buy signal. So we'll take a look at that. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, just remember the words of Albert Einstein or somebody smart like him. It's never as bad as it seems or as good as it appears. So even though things look pretty bad out there, remember how good they looked, way back in May. We are in a bear market. We're going to have some tremendous swings, both sides of the wall, so we'll see how it ends up. But keep an eye on the Treasury bond market that we're very, very close that it's going to be going. I have one other very important announcement to make. And that announcement is today is Thursday, which will be followed by Friday, which is tomorrow, and then we will have Arch Crawford on. So I mentioned that the hedge funds wouldn't be buying today. Well, it's not a Friday, it's a Thursday. It'd be almost nearly impossible for the market to have an up week, but it is certainly possible. But it doesn't look like that's going to happen, right now. But we're going to have some great patterns and stuff. That's pretty much the bottom line. Long term, folks, we've done some damage here, so you want to be prepared for the ABCD patterns to the upside, no matter what you're trading. That's pretty much what you're looking at from a negative standpoint. The other few folks here at TFNN have some really great information. Tom and Tommy and all of them. I mean, Daryl and Basil Chapman, and of course John Logan, Andy. Everybody has some really good stuff, and the folks at Thinkorswim have some really good things too. So, listen to them; they'll help you a little bit, and we'll see what happens. With this. The interesting part is, we're down 300 points, more than 300 points in the Dow. And we come back a little bit, so the bearishness might be, mitigated a little bit today. But the key is going to be on Monday, I think, when China opens. And China is, it's not that big of a market, but it's going to be big enough because of the emotionalism that's being involved in the market. So that's the key. So live every day in an attitude of gratitude, and may God bless. Arch Crawford tomorrow.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.